The luxury home market now, according to the Wall Street Journal, 7 homes are worth $100 million or more closed last year. They were sold compared to 8 the year before. That, of course, though, is the wealthy, uber wealthy, high-end part of the market, because the luxury home market is not impervious to the changing economic landscape. Let's talk about what to expect in this space going forward. For that, we want to bring in Philip White. He's Sotheby's International Realty President and CEO. Philip, it's great to have you here. Let's talk about what you are seeing, because you're out with a new outlook in terms of what we could expect in 2023. We certainly did see a drop in 2022. Overall, looking at the real estate market, what are you expecting to see this year?
Well, thanks for having me. It's really great to be on the show. So, 2022 was somewhat of a tale of two markets. The first half of the year was strong. It tailed off in the second half. Of course, we're coming off of two incredible years, 2020 and 2021. 21 was a historic year. So, it's not unusual to, consider the fact that the market will kind of stabilize, which it did in 22. 23 remains to be seen. The forecasts really, honestly, they're all over the place, whether it's Fannie Mae, the National Association of Realtors, Goldman Sachs, they all have different projections for 23. So it's really hard to really gauge it. I think, the concern that I have and that my agents have is really inventory. Inventory levels are historically very, very low. In some of the most desirable markets, there's only a 1 month or maybe 2 month supply of inventory. That's not expected to change too much. Part of it is that many people locked in very low interest rates during the last low interest rate environment we've been in. So they hesitate to let that go and buy another property. So that's kind of a two-edged sword that we're dealing with. But at the same time, I feel good about 23. I think we're going into it, in a strong way. I think what we're seeing also is that there's a divide between the buyer and the seller. The seller is really wants the multiple bid activity in 2020 and 2021. And the buyer is, looking at the volatility in the stock market, and those kind of headwinds, and that's where we are right now.
Let's talk about the rates. 6.48 on the average 30-year fixed, down from 7.08, but still more than double, to your point, what they were a year ago. How much is the luxury market impacted by the rates we have today?
Well, Dave, the interest rates, affect everything, obviously. For the high-end buyer, the impact is more seen, from a stock market point of view, with these high interest rates, as we all know, have impacted, certainly some of the high-tech companies and have caused some portfolio declines for some of the ultra, high-end investors. So, I think that's, when their portfolio gets hit, I think that's more impactful than the interest rates, because the high-end buyer that we deal with is certainly much more capable of buying with cash. And we are seeing that. We're definitely seeing it in New York City. But we're seeing it in other markets as well. So they have that flexibility. They have a portfolio as well. So, they can sometimes borrow money against their assets, at lower rates as well.
Yeah. And Philip, the activity that you're seeing, the people that are buying, you mentioned New York City being one of those places that's still seeing some demand. Where else are people buying right now?
Well, they're still buying in Florida with, no state income taxes, just and the climate. And there's still affordability. There's affordable properties in Florida. Not everywhere, but in certainly many parts of Florida, there are. So Colorado is still very strong. And I talked to our big company out there this morning, and they had a strong 22. I feel good about 23 as well. So Texas is still strong. So they're, the resort markets are still, strong. Some of them have not had as good a year as 21 for sure, but I think they've been holding up pretty well, even in light of the fact in some markets, prices, if you take Jackson Hole, Wyoming, prices have gone up in some cases 50 to 70% just during this, span of time.
And certainly have seen a huge price spike in some of those hot spots that you were just talking about. Philip White, Sotheby's International Realty President and CEO. Thanks so much.